Welcome to TradeTheMBI.com. This is John. This reports for the 21st, and well, we're still riding this nice high. Obviously, we've continued to see the shakeout growing here, and we're reaching now pretty extreme levels. There's going to have to be some softening in this. We're already starting to see a little bit more increase in short activity, but it still hasn't been enough to overcome the dramatic move from long-term buyers. Now, the fact that short-term buyers have reset completely means that they're still powerful punch capable. We can see that we're moving just a little bit out of the more overbought condition, not a whole lot. And so obviously still everyone's waiting for tax. We're already seeing some regulation movement. That's going to have a pretty decent impact. We're seeing just some staggering numbers for small business and things like that with the optimism. And I'm telling you that optimism and or just psychology really moves the market more dramatically than anything you're going to see from the practical numbers. Now, eventually practical numbers have to catch up, but certainly the market is a leading mechanism, and this is telling you what the expectation is going into the second half of the year. So keep that in mind. Europe continues to be under pressure. You're seeing major shifts in the political landscape in Europe, as I indicated to you before, what we were seeing. That doesn't mean that there still isn't a war with currencies, and the dollar is going to be under a lot of pressure from an increased standpoint, simply because with the change in optimism for the U.S. as far as growth going from nearly a decade of no growth policies to huge growth policies is certainly going to make the dollar more attractive all over the place, and it's really going to put downward pressure on a lot of other currencies. And again, they're going to have to continue to defend the euro here coming at this bottom point. It's going to get harder and harder because you're not seeing any of these growth numbers and potentials for the EU in that. It's also going to put some pressure on the US because a lot of earnings do come from overseas, and so there are some complications with that. Whether the Fed can increase rates or not, this becomes the topic. Is still the likelihood is that if that dollar starts to continue doing what it's doing and we see growth from the economy, you're definitely going to be moving southward for TLT. There's just no other way around it. Oil, gosh, we should shrink this chart now because it doesn't matter how far we go across, it's just straight neutral. I mean, this is just not even going anywhere. And it's interesting because supplies are still through the roof. And the latest stories are about the potential for shale to continue its outpacing as far as barrels per day. But now having that slack built into it, though, is actually not a bad thing, because if you do start to see a ramp up in the economy, it could keep prices still somewhat under control. That will have a very important aspect for inflation, because if you're able to keep that under control to some degree, even with the amount of pent-up demand we've seen over the last decade as far as desire from individuals to be able to spend and do more, it certainly keeps things relatively under control. This was always part of the tripod that I talked about, where you had cheap labor, low oil prices, and you're able to keep no growth policies, and you could really maintain control over deficits in that. Whether or not the stimulus, Obamacare repeal, and then they've put a pretty tight window on it. So we're really getting to that point where there's going to have to be some answers. Gold is going to continue to be the quiet play as it continues to be a safe haven from some of the disrupt. So we saw the pre-market during the holiday here, a little bit of a spike, kind of backed off that. It was way over positive extremes, and it's just due to low liquidity. Was able to do that, but we're getting a reset right now. It should bring us back into line with where that pump was, and then we get to some real action. But the likelihood is that we will come back up to those pre-market peaks, back up in that 23.56 range. So, but we're right at where we originally had called for the target for all that time ago. So all in all, I think things are pretty benign. It's all going pretty much the market's way at this particular point. So as far as that's concerned, the ideas of some of the regulation rollback are going to make things easier for business, which reducing those compliance costs definitely going to help some of the larger corporations. So while they may suffer from some of the euro stall, they're going to have some benefits elsewhere, so kind of a net wash at this particular point. But for now, we're still going to see some choppy action, I think, going forward, but still the general bias is to the upside, so just keep that one in mind. And as always, though, continue to look for me on the Skype chat. Trade well. We'll talk again later.